The US power grid is the single biggest liability to the entire AI trade. The bottleneck for the AI buildout of late 2025 is not silicon, it's electrons. Last month, a major hyperscaler went to a utility provider in Northern Virginia. They asked for a connection date to power their AI training cluster. The utility didn't say no. They said, sure, we can connect you in 2029. They have the land, they have the chips, they have the programmers, but there's no plug. They need a solution, and they need it fast. The US power grid is currently functioning on a timeline that is legally and physically incapable of meeting AI demand. We have transmission lines that take a decade to permit, while AI compute demand is doubling every 6 months. Bloom Energy, ticker BE, has effectively cornered the market on time to power. While utility interconnections are seeing 4 to 6 year wait times, Bloom is deploying on-site power solutions in 90 days. Welcome to The Next Decade, a weekly series where we find and discuss asymmetric trade ideas around the AI infrastructure build-out. This is episode 2, Power. McKinsey and IEA project that the U.S. data center power demand will more than double from 35 gigawatts to well over 80 gigawatts by 2030. The EPRI warns that data centers could consume up to 9% of U.S. electricity generation by the end of the decade. We are simply trying to shove a fire hose of demand through a garden hose of infrastructure. The grid is congested, it is antiquated, and it's breaking. So what happens when a trillion-dollar industry hits a physical wall? They stop waiting for the utility companies and start building their own power plants on their front lawn. Up first, I want to break down the one company that has effectively cornered the market in this time-to-power bottleneck. A company that allows data centers to cut the cord, bypass a 5-year wait list, and generate massive power on site. Let's talk about why we care. Again, the grid cannot keep up. We're seeing AI factories demand 500 megawatts to 1 gigawatt per site. The regulated utilities like AEP, Duke, Dominion are struggling and even incapable of building transmission lines fast enough. So the problem becomes hyperscalers like Microsoft, Amazon, CoreWeave have billions in NVIDIA Blackwell and Rubin GPUs just sitting in warehouses. Every day those chips aren't plugged in, they're depreciating assets, burning OpEx. Bloom Energy's solution, solid oxide fuel cells, are installed behind the meter. This allows data centers to pass the utility queue entirely, delivering 50 megawatts of power in approximately 3 months. A utility substation of that size takes 3 to 5 years. This speed premium is priceless to a hyperscaler racing for AI supremacy. We just digested their Q3 2025 earnings, and BE boasted $519 million in revenue, up 59% year over year, and improving gross margins to over 30%. Up 510 basis points year over year, meaning they're gaining pricing power due to a desperation premium. On top of that, they swung to over $46 million in operating income versus just $8 million a year ago. And management confirmed they're doubling capacity to 2 gigawatts by December 2026. Not a move you make if your order book isn't overflowing. BE isn't just selling power boxes. They're signing sovereign scale infrastructure deals. A few major catalysts that have de-risked this trade, in my opinion, is the $5 billion injection from Brookfield Asset Management to deploy up to 1 gigawatt of Bloom servers. Brookfield can be considered the real estate mogul of AI infrastructure. This is the smart money, and they aren't buying science projects. They're building a utility-grade solution to power their global AI real estate portfolio. Another would be the utility hedge of AEP, American Electric Power, again agreed to up to 1 gigawatt of Bloom tech, meaning even utility companies are admitting defeat in transmission timelines. AEP is effectively using Bloom Energy as a stopgap to keep their data center customers within their service territory while they upgrade the grid. Bloom is selling time, and this is the most valuable commodity in the AI race. The Bloom Energy is the bypass trade, but a structural bottleneck requires 2 things, a bypass and a permanent fix. And that brings us to Quanta Services, ticker PWR. While Bloom goes around the problem, Quanta gets paid billions to run straight at it. They are essentially the pick and shovel provider for the grid's multi-year modernization. Just look at their execution. This is not a guess or even speculation. It's a multi-year contract lockup. Quanta closed Q3 2025 with a record $39.2 billion in backlog. Quanta also recently announced a major platform expansion, including a massive 3 gigawatt power generation and infrastructure engagement with NiSource. That's the scale of investment for one major AI campus. and their acquisition of Cupertino Electric gave them their end-to-end solution. They now manage the entire process, from the utility substation right down to the electrical installation inside of the data center. This AI era needs both of these solutions, the speed of Bloom and the scale of Quanta. As traders, we recognize that both of these structural asymmetries deserve attention. And lastly, we've got to touch on the quality of these electrons. AI computation is not intermittent. These models require always-on, non-interruptible power. They cannot tolerate the volatility of the grid. That brings us to nuclear, specifically Constellation Energy, or ticker CEG. Constellation is the largest operator of carbon-free nuclear power in America. And nuclear is the perfect physical answer to high-density AI demand. It runs 24/7, and it's the single most reliable source of non-intermittent, clean power available at scale. This is not a theoretical trade. Smart money has already locked up the supply. Microsoft and Meta didn't sign short-term contracts. They signed 20-year power purchase agreements for gigawatts of nuclear output from CEG. And on the back of a $1 billion Department of Energy loan just last month, they've restarted the monumental 835 megawatt Crane Clean Energy Center, formerly 3 Mile Island Unit 1. Big Tech is voting with their balance sheet. They're not just buying power. They are lobbying and underwriting the revitalization of the U.S. nuclear fleet to secure their AI future. CEG offers defensive, high reliability exposure to the only clean energy source that can meet the 24/7 AI demands of the next decade. For me, it's a no-brainer to DCA in with the long-term view. The most important takeaway from this is not the ticker symbols, it's the reality of the situation. If AI is going to scale, it starts at the plug. I think you've got to have some power exposure in your portfolio for the next decade. And BE specifically, because I view them as a right now solution, I am currently trading. As the other ones I'm investing in, I'm DCAing in to Quanta, PWR, and Constellation, CEG. But BE, I believe, is tradable. So if this is your first time here, I trade the leaders in a trend backed by growing fundamentals, and I like to wait for them to go on sale. So a retracement, a reaction at around our level, and a remount of the short term is, in a nutshell, my bread and butter triple R setup. And if BE can clear this 110, maybe a bit more safe, the 120 area, that would be a resumption of trend for me here on the weekly chart. This is our first real pullback after the move. It's a trend continuation setup on the weekly chart for me there in BE. I like to trade 3 days to 3 months on my triple R pattern. I'm always out before the next earnings. For me, trading is not an investment. I don't hold through earnings, okay? The others I am willing to hold through earnings because I feel they are more longer term solutions. While, as I said earlier, BE is the bypass trade. They are the right now solution and they're receiving a premium for it. So I view them as tradable, while the other two I view as investable. So that's it for power today, guys. If you have not seen Cooling, episode 1, do watch that. I've got it linked in the description below. And if I can figure out where to put it on the screen, next episode, we're going to feature data. I've got some fantastic names there as well. Make sure you subscribe so you see it when it comes out. And as always, stay safe, manage your risk. Let's go make some money. I'll see you soon.